Good morning, everybody. Welcome to today's 1Million by 1Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we've been doing these free mentoring roundtables for more than 10 years. This is our 421st session. We've had over 100,000 people participate in these sessions. The event is being recorded. You will find recordings of all prior roundtables on the 1M1M Roundtables YouTube channel, and this one will go on there as well. You'll find other content on the YouTube channel as well, video content. On Twitter, you can follow us at 1M1M and at Stromana. Our Twitter handle publishes a huge amount of very rich content. So if you're looking to learn, it's a great learning tool. If you're live tweeting the show today, please use hashtag 1M1M. These are the call-in instructions. This is a roundtable, not a broadcast. We do have programming in the beginning of the program, but we also want you to participate. We want you to participate in public chat. Set your chat to send to all participants so that everybody can see what you're commenting, what you're thinking. And then I will open up the call-in line as well so you can call in a bit later in the program. But we do want to hear from you. Please line up your questions, your thoughts, and so forth. We're going to kick off today's session with a conversation with Evangelos Simoudis, founder and managing partner of Synapse Partners. Evangelos, welcome to the show.
Thank you very much for having me. It's a pleasure to be here.
Well, let's get acquainted. Tell us about the fund's investing focus, your background. What size investments do you make? What kind of things do you like to dig into?
So I'm based in Silicon Valley, where I've been here for about 30 years now.
Where are you from?
Originally from Greece. Came to the U.S. about 40 years ago to go to school and ended up staying. So I started my career as an engineer. My PhD is in computer science and machine learning and very large databases. So
your time has come.
I'm sorry?
Your time has come.
Yeah. Well, let's call it. This is the second spring, the AI spring that I'm participating in. But during the first spring, in the 80s and early 90s, I was working in technology and did my first startup. Came to the Valley 1990 and worked in startups and large corporations. And then in 2000, I moved over and became a partner at Apex Partners, which was a large private equity and venture capital firm at that time. Then moved to Trident Capital. And about 2.5 years ago, we started Synapse. And at Synapse, we invest exclusively in early-stage startups that develop enterprise applications that combine big data with AI-based data exploitation technology. So we're not looking only at machine learning, but other AI technologies that that can take advantage of data and can convert data to insights.
So how big is the fund?
So we're investing, so we have a very interesting structure in that we're investing both private money and we're also collaborating with a number of corporations. So the structure that I wanted to give to Synapse came out of my experience both as an entrepreneur but also as an investor with more traditional institutional venture firms. And we're essentially, there are three pillars to what we do. The first is as I said, we focus exclusively on a particular sector around big data and AI, and we invest in both horizontal and vertical applications. And with regards to the vertical applications, we look at three industries: automotive and by extension transportation, financial services, and telco. Second pillar is that in order to execute on this vertical industry focus, we partner quite closely with corporations from these three industries. And when I say we partner, we not only co-invest, but we spend considerable amount of time with top executives from the CEO on down in these corporations that are our corporate partners, and try to understand what are strategic problems they have, which can be addressed through the application of and AI. And I would say today, about 60% of our investment theses are coming through these interactions. The third pillar is that we maintain a quite significant database of startups that work in these areas that we invest in. So our database today has about 5,000 startups that we track, and track many different attributes of those startups. And we try, in a sense, we try to practice what we preach, and we constantly analyze that data to identify important investment opportunities. So at least 70% of the investments, we have a portfolio today of 15 companies. We've made 17 investments as a fund, and we've had 2 exits so far. But of the 15 active portfolio companies, at least half we identified through analysis of this database.
And so you didn't answer my question about the fund size. What size funds are we talking, and what size checks are we talking?
I think the second part of your question is more important. So we start. First of all, we invest in early stage companies that have a little bit of revenue. So we like to see some proof of revenue, some proof that the solution that the companies are developing is being accepted by the.
What is a little bit of revenue? Are we talking in SaaS terms? Are we talking $10,000 MRR? Are we talking $100,000 MRR? Where are we?
So the investments that we have made tended to have initial revenue from $200,000 to $1 million when we came in.
Annual.
Annual, yes. And now,
annual. Okay.
Depending on the sector, this revenue may be license revenue or initially may be NRE revenue. So if you think of in the automotive area, for example, where we have a significant number of investments in the auto tech sector, it takes quite a few months for an automaker or a tier 1 supplier to sign a license contract with a startup.
Long sales cycle.
Right. So, but in the intervening time, they are willing. These companies are doing larger and larger pilots and other projects with the startups. So, let's give you an example. We invested in a company called Divergent 3D. It is an LA-based company that has developed a data-driven manufacturing system for producing large components of automobiles using 3D printing. That company recently received a $100 million round, and we invested in their first 2 rounds. The $100 million is their third round, and they're they're still working on larger and larger contracts. Now, their contracts are multi-million-dollar contracts now, but they're still project-based contracts for the OEMs that they're working with.
So your business, what I'm hearing is not necessarily a software as a service revenue model business. You see a lot of large deals that are not necessarily recurring revenue deals.
Well, again, this is it depends on the industry, and it depends on whether the company is a horizontal application or a vertical application, and if it's a vertical application, which industry it is working on. So I'll give you a couple of other examples. We've invested in a company called TopOps, Missouri-based startup that is using machine learning and data in order to, focus and reprioritize the sales pipeline of enterprises. In their case, again, it's a recurring revenue model, traditional, subscription model. So again, but it's a horizontal application. So it really depends on the industry. So we come in at this level and we write anywhere from 100 to low hundreds initial check, and then we don't take a board seat. So we tend to work with syndicates of investors that we know, and again the fact that I've been in the Valley as an investor for many years, that helps a lot in both being invited into certain syndicates, but also creating syndicates.
So you lead deals?
We don't. You don't. This is something that, again, I've been in the business for a long time, and this time around I felt that I do not want to be on boards. In a few companies, I take a stronger advisory role. We also have a very strong advisory board in the firm, and our advisors are also getting very involved with our portfolio companies.
This is interesting because you're saying that you do extensive analysis of the companies to find investment opportunities. So how does it work? Do you initiate conversations with them and then you bring your syndicate together and somebody else, you recruit the lead investor, or how does it work?
It varies. We typically start a conversation with one or more companies in a particular sector, either because we hear for some of our partners or some of our advisory board that this is an area that we need to be looking at. Also because of my own background, I tend to have certain ideas of areas that I want to work in. So we start these conversations, and then if there is if the management team is already talking to other investors, we are introduced and work together. Other times we bring together a syndicate and them our diligence.
And so what kind of check sizes are we talking about? Low hundreds to?
Maybe $500,000.
Okay, got it. So let's talk a little bit more about the portfolio companies. Let's actually talk about the two that you talked about that have exited already. And give us a window into what kind of company they were and what attracted you to them and what stage did they come to you at. And I like to do this just to understand how the investor guests we have on this forum, how they think about their investments. So I think it provides a lot of insight to see what they've invested in and why.
So because we look at early stage companies, initially what we consider is, number one, what is the problem that is being solved and how relevant is this problem to one or more of the investment theses that we have. And as I said, we formulate this investment thesis both by interacting deeply with our corporate partners as well as with our own advisory board. And the thing that we look at is the type of intellectual property that the company is developing in order to address the problem that they're solving. So, and again, we both members of my advisory board as well as myself, we get very involved in trying to understand what is the hard IP that is being developed here. So we talked earlier about Divergent. Again, the hard IP is both identifying what type of alloys to introduce into these structures that they're making, as well as how to design the structures in order to have to provide safety in the vehicles where the structures will be incorporated. So data and AI play a very, very important role. It's a very hard problem. It's almost like dealing with fractal geometry in that space. But if you go back to, you asked about the companies that have already exited. So the one company was doing was developing a reporting tool that was using artificial intelligence and knowledge about queries that have been asked in a data warehouse to automatically create the right query and optimize it, right? So that meant that novice business analysts that wanted to interact with a data warehouse can create very sophisticated queries without really understanding what's going on behind it. The second, and this was acquired by Box. The second company was a security you can call it security analytics company, and again, we invested in them because of what we heard from three of our telco corporate partners, which is that they wanted a very flexible way of looking through the security alerts that they're getting into their corporate networks. And as you can imagine, a global telco may be getting millions of alerts per day. And so they wanted ways to do that both effectively and relatively inexpensively, because in order to capture the data to analyze for those alerts, they end up spending a lot in storage, as you can imagine. So this company again had developed this type of a solution, and they had already deployed it with 3 customers. We've introduced them to additional customers, and early this year were acquired by FireEye. Again, what we in both of those cases, initially what attracted us was the IP that was being developed. Eventually, also we got convinced that the team that they had really had the right characteristics. They were hungry entrepreneurs. They were.
Did they have a pilot already underway, a paid pilot already underway when you got involved?
They did. In the first case, they had 2 customers for their early customers for their solution. In the second case, they had 4 or 5 customers, some smaller, some larger, but we could see that in both cases, both how the IP is working, but also what else needed to be done and how the money will be spent and the like.
So how did the acquisition come about? So, and I'll give you a bit of context about where I'm going with this question. It sounds like you are open, you and your syndicate partners that you work with are open to relatively early acquisitions. You're not trying to go for this unicorn kinds of companies. And I happen to believe that that's great, because I think there are many, many, many more opportunities out there that are mid-sized opportunities, smaller opportunities of building, very interesting, very compelling companies solving very interesting problems, but they don't necessarily have multi-billion-dollar TAMs to build these, unicorn types of ventures. But one thing that I've heard from a number of investors who are following this strategy of not necessarily chasing unicorns but are okay with early exits is they try to develop deep corporate relationships so that the acquisitions, they have some window into what they're doing and who might be interested in acquiring those companies. So I guess that's where my question comes from, is that you seem to have very deep corporate relationships. You seem to have an interest in, relatively early acquisitions. How do these acquisitions come about, and what relationships do you have with these acquirers?
So first of all, I should say that having built a couple of and sold a couple of startups myself, as well as having been an investor now for coming on 20 years, that builds certain know-how, certain experience, which influences decisions. Okay.
Yeah.
You invest in early stage companies, particularly if these companies are going after relatively new markets. You do not know whether the market will materialize in the way that every VC is thinking about, large multi-billion-dollar market with huge exits, or whether it's going to be something more modest. Okay, so early stage investing requires agility that other types of investing do not. So we've always been, even when I was with my other firms, we've always been looking at when does the company have the potential to go and become big and execute properly and capture a significant part of a large market, and when a company, either because of its execution inability or because of the market that it's operating in or because of competition, it can never reach the potential that you initially thought it could reach when you were making the initial investment. That also means that the management team, the founding team, and eventually the management team needs to be in sync with the investors, right? So a lot of times, as I said, we start looking at a company around the IP that they're developing, the problem they're solving, but eventually, and certainly before we invest, we vet the founding team and the broader management team quite well, because we need to understand how flexible are they. We've met companies that they want to be unicorn without really understanding whether they can be a unicorn.
Right. Absolutely, we see that too. Yeah.
And we also bring together again. Once we feel happy with our understanding of the management team, we do the same thing with the syndicate, right? So we need to make sure that the investors that we work with are really of the same mindset. Really can demonstrate and have exhibited the kind of flexibility and agility that I was referring to. So there is a lot of science and art that go on into selecting the right management team and selecting the right co-investment partners before you go into this. The last comment I will make is that while we do have these very deep relations with our corporate partners, in these two particular cases, the exit did not happen to one of our corporate partners, but it happened to other companies. And again, that's important for every good VC needs to have a multitude of relations that they bring to bear as they into their portfolio. So, but I will give you other examples. So we have a portfolio company called Renovo, also from the automotive technology. So Renovo has developed an operating system that uses, again, AI to predict and to fuse all the data that is coming from the sensors of autonomous vehicles. And there are hundreds of sensors in autonomous vehicles, so you're talking about very large quantities of data. So they have received an investment from two of our corporate partners, Verizon and Samsung, and they have developed, also working relations with those partnerships with those corporations. So we always try to do that matching, and because of the deep understanding that we have of the problems that our corporate partners are trying to address, we're not only able to make new investments, but more importantly, we're able to materially help the portfolio companies in their mission.
So it sounds to me, if I were to synthesize what I've heard from you, is your relationships are more with the corporates who are either co-investing with you or becoming early customers of your portfolio companies, not necessarily with the acquirers, and the acquirers are coming as you go along and develop the businesses.
I mean, for us, when we select corporate partners, it is important to identify companies that are thought leaders in the spaces and in the industries that we want to work on, because we feel that it's through these thought leaders that we will find the hard and important problems that need to be solved. And as I said, we don't invest in companies that address every single problem we hear about. We hear from our corporate partners about a multitude of problems where data can play a role, but then we have to apply our own filters. We use our advisory board, we use our own other networks to identify the subset of those problems that have the potential to have big impact, right? So because we don't want to invest in a company that solves the problem of just one corporation, right? You want to invest in companies, in startups that solve problems that are important to a big. So I'll give you another example. We recently invested in a company called Humanizing Autonomy out of the UK. Again, we don't invest only in the US because we don't take board seats. We look at investments globally. So we have investments in Israel, in Germany, in the UK, and in several parts of the United States. So in this particular case, again, when we started looking at humanizing autonomy, the problem that they were trying to address is predict pedestrian behavior, and that's an important problem in automated vehicles, not only autonomous, but broadly automated vehicles. But as it turns out, it's also a very important problem to other forms of transportation, so buses and light rail systems and airplanes, because, again, the idea of how a pedestrian behaves, whether they are boarding an airplane or whether they're boarding a bus or they interact with a light rail system and obviously and ultimately with an autonomous vehicle, are big problems. So now, whereas initially we thought that the market would be kind of like this much, by the time that we finished our diligence, we determined that the market would be, much larger because there are all these other opportunities.
Great. So it's also interesting that you said that you're investing globally. That's been completely consistent with what we are doing, so that's a good fit. I will ask you one last question, which is before we start the entrepreneur pitch session. My last question to you would be, what trends are you seeing, and specifically in the AI deal flow, in the kinds of verticals that you are working with, what are the trends?
So I would say that to a certain extent, it is all over the map, right? So we continue to see significant interest in next generation mobility technology and technologies. So it's not only about creating autonomous vehicles, but also monetizing that autonomy. So right now, in fact, autonomy monetization is one of the investment theses that we are actively pursuing. We've made one investment so far in a company called Safegraph, and we're looking at additional opportunities. We continued, so as we get into these larger scale data sets and more applications of automation, we're starting to see a variety of robotic applications for several industries. And then, again, the harder AI problems around natural language processing, natural language understanding, computer vision. So the main reason we invested in humanizing autonomy is because in the process of solving this predicting pedestrian behavior and understanding pedestrian behavior, they really have to solve a hard computer vision problem. And so the bet is that if they solve it, then that's going to be a big reward, but it's also a big risk type of an opportunity. We continue to also see companies that want to automate parts of the entirety of the predictive model creation process, which is becoming harder and harder as companies are realizing that there aren't as many data scientists as they will want to hire, but also as the data sets are becoming larger and more complex, higher velocity, higher dimensionality, lower quality, automating parts of that process becomes maybe even in an industry-specific way important. So we've invested so far in two companies. We've invested in a company called Paxata. We've invested also in a company called Ikasi, both here in Silicon Valley. But we're looking at additional opportunities. And finally, look, cybersecurity remains a global problem. Some aspects of it are domain dependent, so we're looking, again, we talk about autonomous vehicles, they will need to be protected.
Absolutely.
So we've invested in a company called Namogu out of Israel that is using, again, big data to address a specific aspect of security. We're looking, there's a lot of noise in that space, but again, it's a big problem, it's a big space.
Great. Well, very interesting conversation. You obviously have a lot of deep insights into AI, and it's we are hearing from every corner of our universe. We're hearing AI in its various different shapes and forms. So it's been a great conversation. Thank you for sharing your thoughts, and nice to meet you, Evangelos.
Likewise. Thank you. Take care.
So, folks, we are going to switch to the entrepreneur pitch session. Before you start your presentations, I'm going to set some expectations. Remember, we are on your side, and this is a safe working session. We have absolutely no other agenda but to help you along and help you accelerate your journey. So this is, you don't need to be nervous, you don't need to be defensive. Just listen to the feedback, dialogue, and see what you can get out of that feedback. You may disagree with the feedback. That's fine, too. It's your venture. You're going to decide how you're going to play your cards. But usually the feedback is not off the cuff. The feedback is based on deep experience. So take it into account and figure out how you want to use that feedback. One thing you have to keep in mind, not all businesses can raise money. Not all businesses should raise money, and raising money doesn't guarantee success. If you have any doubts about the point that I just made, go read the Death by Overfunding series on the blog, on the 1Mby1M blog. So with that caveat, we're going to start the entrepreneur pitches. Nieminen is the first presenter from Finland. Jesse, please unmute your line and tell us what you're doing.
Perfect. Thanks for having me.
Yeah, my pleasure.
If I were to summarize what Viima does in a couple of sentences, so basically what we do is we provide a software as a service platform for companies to use for collecting ideas from all of their stakeholders, their employees, their customers, partners, whatever, and then manage those ideas, evaluate them, and develop them forward together, and finally turn those into innovations at the end of the process. So if we take the next slide, basically our customers are they are mostly mid-market and large enterprises that are looking to become more innovative. Since obviously what we have is a software platform for people to use on either the desktop or on mobile devices, it's mostly knowledge workers that are in our core markets. So from that point of view, it's the information-intensive industries that we've seen the most success with so far. If we then go a little bit further into the segmentation, basically the innovation management software market is quite competitive. There are quite many companies building software for that market. Many of the competitors have quite similar features as we have our own distinctive advantages, which are mostly suited for the mid-market segment. This is kind of like a brief overview of the different segments that we typically see in the market. So in the smallest companies, there are not that many employees, and usually information flows around quite easily. You hear that the classic water cooler banter around the ideas that other people have in the company. But once you start to grow, then you kind of like lose that because the employees and all of the other people are in different places geographically or even in the different floors of the same building. So that's when
Jesse, I have a question. Is there any vertical bias in your mid-market target customer base?
Yeah, so mostly we've been targeting, as I mentioned, the information-intensive industries. So in practice, we have a lot of customers in the banking and insurance sector. So those have been sectors that we have seen the most success with so far.
Okay.
Then what we do on the customer acquisition side is to focus on inbound marketing and inside sales track. If we were to sell for the largest customers, that would then be more of a traditional enterprise sales play, but we've seen a better fit with the inbound model. Here are a few of the companies that we work with.
And these are all paying customers?
Yes, these are all paying customers. At this point, our free version has thousands of organizations using it around the world, and we have currently about 100 paying customers, some of which you saw on the last slide.
And how much are they paying? What is the model, business model, pricing model?
So the pricing model is basically it's per user per month. So we have licenses that are priced starting at $3.50 per user per month, and obviously the more users we have per customer, the larger the deal size. The prices do come down a bit when you have larger companies that buy.
What's your average deal size in the 100 customers that you have, 100 paying customers that you have? What's the average deal size?
The average deal size is somewhere in the high hundreds, so 500 to 1,000 is the average size.
Per month?
Per month, yes.
Per month, okay, all right. So let's go into your questions. Where are you facing challenges?
Basically, when it comes to reaching mid-market organizations, there's obviously tons of them around the world. Since we're focused on like the global market, there isn't a geographic focus that we have. Reaching all of them.
Where are your customers right now? The 100 customers that you have are all European customers?
They're all over the world. Basically, we have paying customers in all the continents except Antarctica. So.
And where? How did you find these customers? What has been your acquisition strategy? Where do the leads come from?
Mostly from online. So we have inbound content on our website, and that drives
content
traffic
marketing
for us, and those then, yeah.
Okay. All right. So inbound is great. There's no question inbound is great, and it's one of the best ways to actually generate leads. But as you go from 5 customers to 50 customers to 500 customers, you kind of have to create a bit of an outbound strategy as well.
Mm-hmm.
And
yeah.
And that's where, so we use a model called Sales 2.0, which is our methodology for, scaling and building repeatable sales cycles. So I would recommend that you look into that and implement that. And we have had many companies in our portfolio who have very successfully managed to get to the larger clips of repeatable sales cycles using that methodology. And it's given your price point, actually, you do need to sell on the phone. You kind of need to close the deals on the phone. This is not a price point that you can go out in person and sell deals. And mid-market SaaS typically gets built that way. So I guess there are a few things that we have to work on if you decide to use 1 million by 1 million. We do need to understand the competitive positioning. You have said earlier on that there are competitors you're facing. I'd need to understand who are the competitors you're seeing in deals, and what makes you win deals versus what makes you lose deals, and that drives the positioning. So those are some of the things that as you are asking me these questions that are standing out to me, is that those would help you scale and get to a higher degree of repeatability and getting from 100 customers to 500 customers to 1,000 customers. Channel, well, mid-market channels for new technologies are there, but you have to be very deeply positioned to be able to do that. So if you want to go after the financial services industries, and if you think that you want to go after, let's say, insurance as a sector, then you need to find VARs in the insurance sectors who have the insurance relationships and know how to sell technology such as yours into the insurance sector. So I would say, if from a VAR recruitment point of view, I would try to go with a vertical strategy. Look for VARs who have vertical relationships. Okay?
Yeah, sure. Yeah.
All right. Well, good execution so far. So I take it you're above $1 million in revenue now?
This year we'll be right around the 1 million benchmark.
Great. Excellent. Congratulations. Big milestone to cross.
Thank you.
All right. Well, our next presentation is from Nita Ambedkar from Madison, Wisconsin. Nita, please unmute your line and take it away.
So, hello, Samana. Are you able to hear me?
Yes, we can hear you.
Yeah? Okay. So let me start with the introduction. I'm Nita Ambedkar, and currently in Madison, Wisconsin. And the fun fact, I like that you asked for that, or kind of suggested we add that. So I like dancing, so I became a Zumba instructor and a PolyX instructor, kind of combining my passion for dancing and fitness in the last 2 years. So about me, I've been in the IT industry for the last 17 years. I worked for major corporates and bigger organizations in project management, program management capacity. And now I've moved on to my own venture, which is SourceRight. So I'll start with SourceRight. So SourceRight is a venture wherein kind of connecting the IT requesters and the IT providers. So the problem that I'm trying to address is, right now, there are a lot of small businesses which are trying to, once they start on their entrepreneur journey, there's a lot of questions. How do I go about? What technology should I use? What are the tools that are available in the market? How do I know I'm getting it at the right price? So they have all these questions, and they not necessarily have a go-to person to go to. At the same time, there are a lot of small IT teams which are just starting up. They have quite a bit of skill set, but they not necessarily know where to go and reach out for their customers. So to address these two problems, I launched SourceRight last year to help connect the IT requesters and small IT teams. So that's the underlying offering, or that's like kind of a marketplace to connect them. So for the IT requesters, what I offer is an outsourced CPU solution wherein I help create and manage IT design and development experience by providing the following services. So right from your technology feasibility, due diligence, vendor selection, project management, and technical recruitment, all the different facets that you would need on your entrepreneur journey, that's the offering for the IT requesters. Can we move on to the next slide? And for the IT providers, there is a platform which kind of helps them reach out to this right-sized IT projects, right-sized IT small businesses where they can kind of find the right mix and get the business going. At the same time, I help them facilitate with the presentations and negotiations to help win this business for them. So these are the two aspects of the two different markets that I'm trying to address and get them together. Also, to give a little more background about how did I start doing this. So after I kind of in 2015, I started working with the startup companies who were majorly based in India, and they were trying to look to expand their business in US. And that's how I started getting into the startup community, started reaching out to the small business. And that is where that need, that I want to do all these things, but not necessarily who do I talk to. So they were really happy to find a person that they could talk to, ask their questions, and then get an affordable technology solution too. So with that, it started, and then last year when I decided to launch my own business, I developed a platform which allows you to do that. So the initial idea is similar to your freelancers and outsource. You can come and put in your request, and then the providers go ahead and bid for it, and then they win the business. So the initial idea was all online, and it was supposed to work that way. And why the differentiator? Like, since there are already so many platforms like outsource, freelancers, what do I bring to the table? What would SourceRight, how would SourceRight be a differentiator? So the thought process was when you work with a freelancer team, you ideally get to work with one single person. Whereas when you would work with a smaller team, even if it is a team, that there's a team expertise, there's a certain process. If somebody is developing, somebody is going to kind of do the quality assurance and things like that. So bringing that expertise to the table with that, this was launched that, okay, it's a win-win for both the small businesses who are looking for IT services as well as who can provide these services at the right price. Now, so yeah, I'll come to the problem that I had later. So yeah, looking at the market size, so there are currently 2.8 million small businesses, and if they have an average spend of $10,000 IT spend.
You don't mean $2.8 million, you mean 2.8 million small businesses with IT average spend.
Oh yeah, I think I got the dollar wrong. Sorry. Yes. So yeah, so I'm targeting like the 1% of this entire market, and who will my typical business scenarios will be people who are entrepreneurs, small business owners with a team size of 2 to 50. They should be registered businesses. That's kind of one of the requirements, and they are focusing right now. The focus is on mobile apps, IoT, ERP, and websites. So this is the target customers that I'm trying to reach out to. The focus, again, specifically being mobile apps, IoT, and ERP. The way I've kind of outlined it right now is the providers that I have are in this space. So I have that capacity built to be able to deliver these kind of projects. And I think those are also the things that are currently like once the small businesses start or entrepreneurs start, they kind of get to that, okay, let me go ahead and build a mobile app and things like that. So where am I right now? So at this point, this year, I've...
The slide is unreadable. For some reason, your slide is...
it's a little hotspot. Sorry about that. But I'll just kind of summarize where I am at this point from testing this model. So as I said, once this was launched, the idea was the people were just going to come to the website and it's going to work out. So that did not happen. And that's where the consultant approach came into picture, that small businesses like to work with a one-on-one or more of a consultative approach rather than just going to the site and bidding for projects or asking for, I want so and so. So with that in mind, I reached out to the small business community within Madison, and I'm part of a couple of accelerators here, and I've kind of given out 25 or so quotes over this period of time, and I've successfully completed 8 of them. Again, the problem definition for me right now is the deal size that I'm currently looking at are really small. Like I started off with, say, just the websites. Let me test it out with websites. So that works. Now I'm onto the mobile apps and ERP, yet to get I'm like the leads are there, but pretty much yet to win the business. So can you move on to the last slide? So as I mentioned, the acquisition strategy is networking within the small business community, as well as partner with the accelerators, incubators that are there within the Madison startup. This established my credibility by speaking at different conferences and workshops. Then I'm a technology coach for one of the accelerator program here, and in the social media and personal network of providers. So this is how I'm reaching out. The question is, so as I said, I did not have a lot of success for the people to directly come to the tool, and kind of that I feel limits the growth aspect for the whole thing, because if it becomes more consultative, then kind of it limits the way it would scale eventually. So is it a right strategy to reposition the tool that is being built more of for the providers at the back end, and
so let's work through whom you're competing with first, and that will give you insights into what's happening here. So the people you are trying to sell technology solutions to are typically going to Upwork, putting projects on Upwork, and have swarms of providers from Eastern Europe, from India, from all over the world bidding for their projects. And these are people whom they can talk to and interview and reference check and so forth to figure out how to recruit the right partner. And I think this has become quite a known strategy. There are lots of providers, IT service providers out there who are making a good living all over the world by servicing this market. So given that is your number one competition, what do you do differently that would make people come to you versus directly to Upwork? That's a question that you're going to have to answer. Now, the way to answer that question is through segmentation potentially. There are people who are very comfortable hiring technology resources on Upwork. These are small businesses led by technology founders, technical founders. Yeah. They can comfortably go out there and figure out what is the capability, what kind of background do they want to hire from, and so forth. But then there's another category of founders and small business owners who are non-tech background people, and that is probably your sweet spot. So the question is, what is the behavior of these people on Upwork? That is something that I would encourage that you investigate. Okay. How are these people hiring hiring their technology resources. That's something that you need to investigate. You need to talk to basically non-technical business owners to see what are the gaps. And you need to talk to a few hundred of these to more in an understanding of their problem and their mindset point of view, and then design what is the right solution for you. Because I think the provider side is actually out there. So if you can become a legitimate source of leads and source of business for these providers, there will be providers who would be willing to work with you as your market of providers.
Yes.
It's the customer side where you are trying to differentiate from Upwork somehow by providing a layer of consultative CTO, let's say, to non-technical business owners. And that is a specialized positioning. So that's my feedback. That's my understanding. That's my feedback. I'm happy to advise you further on how to do this. But I think that is the rub. That is what you're going to need to figure out.
Sure. I think that's good advice. I'll connect with you and we'll see how things can go
Sounds
further.
good. I will explain a bit later after I'm done with the pitches on how to use the program to address these kinds of issues.
Right. So I do have 11 o'clock, so I'm going to drop off. So
that's
maybe
okay.
I'll
be
read up
available
or
in the recording.
Oh, sure. Yeah. Thank you. Thanks for your time. Thank you. Yeah.
You're very welcome. Adi Kaimowitz, you are up next from Cape Town, South Africa.
Hi, so exciting. Thanks
so
for
exciting,
having me on. I'm totally out of my comfort zone.
Your slide is very funny.
A lot of the conversations that I've heard today are different to what I normally hear. Some fascinating entrepreneurs who seem to be going for their dreams. Very nice to hear. So thanks for having me here.
What are you working on?
We have a business called Virtual Actuary.
Uh-huh.
It is an actuary consulting business.
Okay.
Okay. And so you get two different types of actuaries. You get the actuaries that work inside the business, the insurer or the bank or the pensions administrator or the healthcare company or the investment house. They work at the company. Then you get the consulting businesses, the big consultancies. They all work either in the life insurance sector or general insurance, banking, pensions, healthcare, investments, or wider fields, but they are consulting actuaries. So we have a firm that is a consulting actuary business. Okay. So what makes us a little bit different to the other big consulting businesses is that we provide the same actuaries as the other big consultancies. The difference is from a price point perspective, we can charge significantly less because we don't have big offices. I think this is our
and
first.
Do you work? What is so this slide that you have up right now, 1 million in the first year? That's your current revenue. Is that what you're saying?
Deals signed for the first year will add up to new technology. Okay, so what makes us a little bit different to the other consultancies is that we use technology to be able to communicate with our clients in a more efficient way. So the other consultancies, as a business model, they will go to see the client every single time. I think programs like Zoom or WebEx have allowed us to interact with our clients in a more efficient way. So we've completely embraced the more efficient way as actuaries to be able to communicate with our clients, to be able to service them, to be able to have meetings with them, to be able to share screens. So this significantly reduces the running around time in being able to service those clients. So we're providing the same actuaries, we're just doing it in a more efficient way.
So who is the client? Are you talking, what So you heard in the last presentation, for example, a lot of discussion about segmentation. So who is the client that you're going after?
So the client is the actuary inside the big companies, inside the big insurers. They are our clients. Why do they want to be our clients? Because they don't have capacity in their own actuarial teams to be able to handle their work. So it takes too long to hire actuaries, 4, 5, 6, 7 months. So what happens is our actuaries can do the work as consulting actuaries for 2 months or 6 months or for an entire year, where instead of them hiring somebody in-house, we can be an outsourced service provider on an ongoing basis, because our price point is significantly lower than the big consultancies that they've normally interacted with.
Got it. So you're basically outsourcing the actuary function in a virtual actuary mode. And your people are all in South Africa?
And we've got actuaries in America, we've got actuaries in Singapore, in Switzerland, in Cyprus, in Israel, in Zambia. So we've got actuaries all over the world. And we targeting
Is this a marketplace or an outsourcing company?
I don't understand the question. Can you just phrase it a little bit differently, please?
So are these people around the world, these virtual actuaries around the world, do they work for your company or are they in some sort of a marketplace like Upwork and where you basically connect them with clients? One second. Maureen, can you mute? Yeah, one of the lines is screaming disruption. All right, go ahead.
Okay. So Virtual Actuary is not an app for actuaries, okay? So it's not a marketplace. The reason it's not a marketplace is because the projects are too technical and too tricky to be able to find and, let's say, buy actuaries online. We operate as a full-blown consultancy, like one of the other big consultancies, in that we deal with the client as a business. All the actuaries work full-time inside Virtual Actuary.
Okay.
They are.
Got it. That was my question.
Okay. So how this all started is that I spent 10 years recruiting actuaries. Okay, and so I got to know all the actuaries in South Africa, or the significant amount of all the actuaries in South Africa, very personally, and I have quite a big network. And so as a result of websites like LinkedIn, unfortunately, it has destroyed the recruitment industry for recruiters.
Yes, yes.
It's just a fact, and I saw this coming about 3 or 4 years ago. So the key was, what does one actually do with a significant deep network of actuaries? The very difficult question to answer. And after about 2 years of trying to work out what does one do with a network of actuaries, Virtual Actuary became the solution, because we can scale up our business, because I've been scaling up everybody else's businesses for the last 10 years. So how it works is that our actuaries are not salaried employees. So it's a four-way swing. So what will happen is that the client can pay less than half for an actuary that they would have paid for at another big consulting firm. And when the client pays, the business Virtual Actuary only takes a small percentage of what the client pays on a monthly basis. So what that means is that the actuaries will earn more than double than what they would have at another consultancy. It's a four-way swing. So the clients know that they're getting the same actuary that they were paying a couple $1,000 an hour for at another firm. It's the same actuary, but if they hire them through us on an ongoing basis, they can pay significantly less. So the actuary is more efficient, they're more rested, and so, yeah, we're a consulting business like the other ones. The way that we've turned the earnings table upside down makes us quite more efficient.
What is your question, Adi?
I don't really have any questions. I was so excited to be here. I don't really have any questions. I wanted to participate. We are going into what we call the software as a service market. We have a partner overseas where we've assisted them in creating an insurtech software that can do in 10 seconds what the biggest service provider in the market at the moment does in 3.5 hours. So this means that our actuaries will have better software or faster software than the current service provider that leads the market.
Great. So it looks like you know what you're doing. You're getting business. You know how to deliver that business. So keep going. And if you get stuck and if you have questions at some point, come back and check in with us.
I can definitely come up with a question.
What is your question?
So what would be the best way to interact with a client who is a global client, being a South African business, as far as having a central sort of overseeing umbrella company from a jurisdiction
What is your average deal size with one of these clients?
Probably about 100 to 150,000 rand a month. So that's about $10,000 a month.
So at that price point, typically deals need to be closed by phone. $10,000 kind of deals are, well, actually, if it's an ongoing client, you could also, this is a price point where you could also go direct. So I think the question is, in the experience that you've had so far, what are you learning? Do people want to meet you or your partners before closing a deal? Or are they willing to close deals by phone, online, virtual meetings, etc.?
So we're closing the deals, doing it in a virtual manner, because what we're trying to show the clients is that we can interact with them virtually and on the phone without having to go and see them, which significantly changes the way that the business is being done at the moment. So let's say an insurer in Asia or in Singapore that is currently interacting with their consultancy across the road that's charging them maybe $300 an hour, we can do the exact same work remotely and digitally at a third of the price from South Africa.
So in that case, I would say that I say exactly the same thing that I told one of the previous presenters is we have a methodology called Sales 2.0, which is this what we call virtual selling. Basically, you close deals virtually kind of methodology, and I would basically ask you to implement that at scale, and that gives you repeatability, that gives you structure of exactly how to, keep moving deals. Basically, you have to start a funnel, how to manage that funnel, and so on and so forth.
Well, that's what we try. That's in fact what we are doing at the moment. Sometimes what we find is that the clients have to see somebody face to face, and the actuaries go inside the client's office. But in most of the circumstances at the moment, our actuaries are working inside the client's office, on the client's machinery, on their lockdown laptops. Because even though we are a virtual business, we also understand that going to market in a market that is traditionally more face-to-face, one has to enter in a more face-to-face way. Because you can't just come in as a virtual business and say, oh, we're completely changing things. You have to build it up.
Those are the details that you're going to have to figure out as you get into the market and learn how the market operates. Every market has its own nuances, and you have to structure a business and structure your business practices based on the dynamics of that business.
It's not a simple business. I wish it was a quick app that you developed once and everybody bought into it, but how it works is that the contracts are banking contracts.
That's okay. Those kinds of more complex businesses have a much higher barrier to entry. So once you figure it out, you will have a good shot at owning the market and not get displaced that easily. The low entry barrier businesses get flooded with competition very, very quickly.
We just want to participate with the other big global businesses. We don't want to lead the market just yet. That would be a little bit brash. If we could just participate at the same level as them on a global scale, that will be quite nice. I think it's quite a big market, as you can imagine, the actuarial consulting market. no point in throwing numbers around, but it's obviously a big market. And we've got the ability to scale up our business, whereas I think any other business that's tried to copy exactly what we do, even in the actuarial space, they will find it a problem getting past 100 actuaries.
Good luck. I think you're moving in the right direction, so keep going. If, as I said, if you get stuck, come back and we'll help you.
Thank you.
We're going to move to Viadimir Lialine. I'm not sure how you say your last name. You need to unmute your line. 1 second. There we go. Go on.
But I'm on the phone. You want me to speak through the... Oh, I see. Can you hear me now?
Yes, we can hear you now.
Okay, great. So let me start. Okay, it's my pleasure to be here. And
where are you dialing from, Viadimir?
I'm dialing from Miami.
Okay.
Okay, so
go ahead.
our company provides infrastructure and end-to-end solutions for artificial intelligence, machine learning, and deep learning data projects. We're organized in the state of Delaware. It's not yet, not ready. Go back. One slide back. Yes, thank you. Okay, so we are organized in the state of Delaware, and we are looking to raise $500,000 as a seed round in a convertible note, which provides 8% per annum interest.
What is the business?
The business is GPUCloud. We provide end-to-end solutions. So we are working on developing autonomous flying drones, cancer detection, climate change modeling, and genomics. So we have the infrastructure where we will sell compute power in the cloud, and we also provide data scientists to work on those projects.
And what do you have currently of this? What validation do you have?
Sorry?
What validation do you have? What stage? Is it a concept stage venture, or do you have something going on?
Already in production. We're self-financed. We started 6 months. I financed the whole project. We spent about $150,000 of our own money. And now we're in production. We've partnered with Nimbix, IBM, and every other major cloud provider. And we also have data scientists. So the key here for AI is to have data scientists. So we are establishing a branch in Switzerland, which is the leading nation in AI, in order to partner with local universities, University of Lucerne and ETH Zurich, and they already have few programs that's subsidized by Swiss government in AI development. So that gives us how we could get to develop those autonomously flying.
Do you have current customers?
No, we don't have any customers. We have a very large pipeline. Our cycle is about 6 to 12 months. The average sale is about $50,000 to $150,000.
So when you say you have a very large pipeline, what is, if you look at that pipeline and identify,
I'm
sorry, you're trying to speak and we cannot hear you. So the question I'm asking you is that in that pipeline, if you look through that pipeline, which clients are in the most advanced stage and what have you learned from them?
Well, it's a very early stages. We just launched about 3 weeks ago.
I see. Okay. So I guess the issue is that you want to raise $500,000, but it looks like you're kind of like a pre-seed company. with no clients and not much validation yet. So that's a stage that doesn't go straight into a $500,000 financing usually. You're going to need to do it in stages.
I respect your opinion, but we already have a product. We don't, we just need to finance marketing efforts. We're already in production. We're selling. We're already selling. We could onboard clients, and all this money, we have a 60 to 90 days positive cash flow after the investment. So
I'm sorry, you don't have any client, but you have positive cash flow. How does that work?
We will have a positive cash flow after the investment.
How? With no client, how do you do that?
After we invest the money, we will close the client. Very simple.
I don't think investors will buy that.
Okay.
As you heard earlier in the conversation we were having with our investor guest today, that is the point of view from most investors that we work with. Unless you go for pre-seed financing, which is a slightly different, you're asking for seed financing. If you're asking for seed financing, people want to see some revenue before they're willing to write checks.
Okay. And what do you think it should be called? Pre-seed? What we should call it? Pre-seed?
If you call it pre-seed, that may be financeable. But your pitch is not an investor pitch. You need to work on and put together an investor pitch with which you can raise money. This pitch is not an investor pitch.
Well, I understand your criticism, but I'd like to understand how do you change it to make it an investor pitch?
There is a very specific set of criteria that are required to be covered in an investor pitch. For example, bottom-up TAM analysis, positioning. You're saying that you're going to be servicing so many different categories of customers. Typically, the kinds of companies that do get financing focus on what types of customers are the most likely to buy and how do you acquire those customers and stuff like that. That's called positioning. So we need positioning, we need a compelling go-to-market strategy, we need a bottom-up TAM analysis. All of those things I don't see in this pitch. So I can't make a judgment call on where you are in terms of your fundability. So you have some learning to do, and that's something that if you want to use the platform, the 1 million by 1 million platform to plug those knowledge gaps, you're welcome to do that. I will explain how to do that in the next segment.
All right, great, thanks.
You're welcome. Okay, folks, that is the last presentation we're going to have today before we go into Q&A. So line up your questions. In the meantime, I'm going to spend 3 minutes explaining to you how to use the 1 million by 1 million platform for those of you who need to plug your knowledge gaps. And before I do that, I want to ask you for your help in spreading the word about 1 million by 1 million. Now, everything resource-wise is at 1Mby1M.com. You'll find a great blog. Just by following the blog, you'll learn a lot. There's the Entrepreneur Journeys book series. There are 12 volumes of those. They're case study-based books. Again, you'll learn a lot by studying those books on specific topics. They're organized thematically. Then you have these free roundtables that have been going on for the last 10 years. And you can keep attending these roundtables, listening to the recordings, and that's also a good learning tool. Now, if you want to go into the more extensive guidance, our full acceleration program is 1M by1M Premium. And that offers you extensive methodology guidance, an online curriculum through which we teach you all the pieces, methodology pieces that you need to learn to plug your knowledge gaps. We help you with business development where we have contacts. We have a gigantic Rolodex in the technology industry, and where we have contacts and you need to be connected to these people, our Rolodex is available to you through this program. We also do this kind of strategy consulting in private roundtables. That's our interactive coaching piece. And then we help you with financing and we help you with media relations. However, there is one caveat on financing. You have to be fundable for us to introduce you to our network of investors. We have a great network of investors, but we only send you to these investors once you are fundable. So there's a lot of work that goes into preparing a company for fundability from a business point of view and from a presentation point of view. So all these comments that you're getting, that you're hearing here today about your pitch not being ready to be introduced is a factor. You have to plug the gaps and create a pitch that is a fundable pitch. And if you don't have the goods, then you can't, no matter how much you finesse your pitch, that is not going to be sufficient. You would also need the goods with which to pitch to be introduced to investors. So those are just the facts of life in the journey of an entrepreneur. Go to the 1Mby1M self-assessment and ask yourself the questions that are articulated in this questionnaire. This will help you prepare for an investor pitch. And if you get stuck on specific topics, go to 1Mby1M Basic and subscribe to the curriculum and start plugging the gaps in your knowledge. So I've talked a lot about the Sales 2.0 methodology today on various different entrepreneur pitches. Sales 2.0 methodology is available in the curriculum. You can learn it from the curriculum and start implementing it right away. If you need to learn positioning, go do that. If you need to learn competitive analysis, go do that module of the curriculum. So there are various modules. Go dig around in the website. You will find descriptions of what to expect from the premium program, what to expect from basic. Lots of FAQs, video FAQs, descriptions of the curriculum. We are a case study based program. We have 900 case studies of successful entrepreneurs, and we've built this program on the basis of these case studies. There are 50 plus unicorn entrepreneur case studies, 400 plus case studies of venture funded companies, 350 plus bootstrapped entrepreneur case studies. So all this has been stitched together to develop this curriculum. So you're standing on the shoulders of people who have done it before and learning from them. And that network is also available around us. Our methodology is lean, capital efficient, bootstrap startups. You need to bootstrap first, raise money later. That is how the industry operates. If you expect that somebody is going to write checks for you to go start your company, that's not how the industry operates. So we can't help you if that's your expectation. Now, we have upcoming free roundtables, 3 more in November and 1 in December. So this year we have 4 more roundtables. They're getting sold out very quickly, so you need to go register and book your slots, and Maureen will give you instructions about pitching. We also have in-person rendezvous. We have one on Wednesday, one on the 7th, actually, and then we have one on November 20th, and then one on December 19th. So there are 3 more in-person rendezvous in Silicon Valley. If you're in Silicon Valley, if you're visiting Silicon Valley from out of town, build this into your agenda so you can come and, spend some in-person time if you'd like to around this program and the network around it. That's pretty much it. These are the call-in instructions. If you'd like to call in and ask questions, feel free to dial in. Let us know in public chat that you are dialing in. I see a bunch of hands up. So dial in to 650-479-3208, access code 405-985-075, and you're very welcome to ask your questions. And you can also ask questions in the public chat. So whichever way you want to ask questions is fine. Let us know in public chat if you're dialing in so that I can call for you. Let me also introduce you, meanwhile, to Irina Patterson on the 1Mby1M team. And she will answer questions about the program. If you have questions, just reach out to her. She will be happy to answer. So, Q&A time. Anybody? Questions, comments? You also feel free to introduce yourselves in the public chat. Let us know who you are, what you're working on, where you're dialing from. We are always interested in networking with people on the call. Anybody? Questions, comments, observations, feedback, introductions? Sumant Kachru, thanks for creating such a nice platform. This is Sumant Kachru, I guess, CEO, S-Act Project Management. All right. Sumant, what do you do? What is the company? Arsalan Sheikh, please introduce yourself. Ask your question. From United Arab Emirates, work for Oracle. All right. Are you planning to apply for the next round of the Oracle 1M by1M challenge? So Oracle people, you have a very interesting deadline coming up. Your applications are due for the Oracle 1M by1M Intrapreneurship Challenge. The deadline is next week, so you need to get your applications together and start sending them in. Anybody else? Questions, comments, feedback, introductions? A lot of people are still in the room. Even though it's a long session, a lot of people are still in the room. The roundtable is part of the application process. We want you to attend these roundtables so that you get a feel for the program, get a sense of how it works and the network and everything. Sumant, you build buildings and infrastructure. You feel digital revolution has not done much for your industry, so maybe you will create something new, some new solution to get that market. That sounds great. There are companies in the construction industry, software companies that facilitate the construction industry, the architecture industry, and so forth. So do your comparative analysis to understand what is the prior art in your domain. Comparative analysis is a very important piece of figuring out what to do, how to move forward with things. All right. Shaneshwar, you have a good business idea to prevent theft from jewelry shops. So how do you build a business step by step? Well, to you, my feedback is you should do the 1 million by 1 million basic curriculum and learn how to build a business. We teach that very precisely, and I think the fastest way that you would learn that is by doing that curriculum. Sumant, you're here to know about incubators and accelerators. Well, this is both an incubator and an accelerator. Feel free to use the program in advancing your journey through the entrepreneurship process. For first-time entrepreneurs, it's a very, very steep learning curve. So if you're trying to, cover that learning curve, I would strongly recommend do 1M by 1M basic and get going by using that curriculum. Maureen, could you please share what to expect from 1M by 1M basic, and that gives you the link to the curriculum as well, and maybe a link to the description of the curriculum. Maureen will share the links in a moment. Bhupati Ramamurthy from Bangalore, India, also works for Oracle, planning to apply for 1M by 1M. Perfect. We will look at your application and look forward to reading it. Anybody else from Oracle who's planning to apply? We've heard from a couple of people, one from Bangalore, one from UAE. Anybody else from Oracle? And Shaneshwar, you have the link to the curriculum on your screen. Maureen, could you also provide the curriculum description? This is the curriculum homepage. All right. Anybody else? You're very welcome. There you go. Shaneshwar, you should be all set with those two links.
Yes, I'm from the Oracle too. That I'm from China, and
all right.
And
You're planning to apply for the program?
Know more. Yes, but I have questions about that program. because we are because you are talking about entrepreneur, how to make deals, how to raise the market. But for the persons inside a big company that we are going entrepreneurs, what is the difference with entrepreneur and entrepreneurs, and what your lessons for teaching?
So what we are doing with Oracle in the entrepreneurship program is to help people who have interest in learning how to bring a new product to market learn how to do that.
Yes, but I think that actually we are not going to have in pitching or raise money, so
yes, you will be pitching. You're going to be pitching. You're going to have to convince Oracle management to invest in your project. So yes, you will be pitching. You will have to raise money, but it's a different process. You're not going out to raise money from VCs and angel investors. You're going to be in this case, you're going to be pitching to Oracle management. So there is a definite, very specific process that the program follows to teach you how to do that.
I see.
You have any other questions? I'm happy to answer.
And I think that's for now. All my questions here.
All right. Good luck. If you choose to apply, good luck.
Okay. Thank you.
What time is it in China? Maureen is asking. I imagine it is very late.
Well, it's about late in the night.
Well, thank you for staying up and attending the program. So, Sumant Kachru, your question about what is the current score towards the 1 million mark of entrepreneurs? This is a very difficult question to answer. We have a community of about 500,000 people around the program at the moment. And we have entrepreneurs at all different stages of evolution. We have, as I told you at the beginning of the session, these roundtables have been attended by more than 100,000 people. So those are the metrics that we give out. We've done more than 420 roundtables. We actually do not have a way of being able to track all the entrepreneurs who have been part of the various touch points of the program and what their current situation is. So we are happy to add value, but we don't have any way to demand that they report back to us. So that is one of the limitations of reporting where are we in terms of the 1 million mark. But we are happy to, continue to spread the knowledge, the network, and so forth. And to the extent that we do know that entrepreneurs are reaching a million mark, you can go to the website and look at the $1 Million Club case studies. You can look at the Deal Radar, Incubation Radar company profiles, and you'll see lots of companies that are profiled in there. On Entrepreneur Journeys, you will see companies that have crossed the $5 million mark, and so forth. So if you go to the blog, you will find lots of case studies of entrepreneurs who have crossed the $1 million mark. Adi Kaimowitz, your question is, how does one strike a balance between not really needing an investment partner versus knowing that the business is aiming to be an institutional business and inevitably an investor will come on board eventually? Adi, I would recommend that you do the financing module of the curriculum, and it's a very large module with very in-depth treatment of your question. It's very difficult for me to answer this question in 2 seconds. However, I'll give you one thing to remember. If you want venture financing, mostly investors are looking to see that can you grow your business from 0 to $100 million in 5 to 7 years. That is the typical venture capitalist assessment benchmark. And it's a very complex process. So to get a feel for the complexity, I would recommend that you go do the financing module within the curriculum. Okay. Thank you, Sumant. I'm very pleased to hear that you find it helpful, and I hope you will use it. Does anybody have any other questions or comments before we adjourn? Bhupati, you don't have any knowledge on marketing business model, but you have a great product ideas and POC ready for manufacturing industries in the field of IoT and PLM sector. So you're going to learn. By the way, my name is Shromana, so you don't need to call me Mitra. Call me Shromana. That's my name. If you win a scholarship to the 1Mby1M Oracle Challenge, this is exactly the kinds of things that you're going to be learning, is how to put one step before the other, what is business model, what is go-to-market strategy, and all of these business aspects of how to take a product to market. That is the whole point of the Oracle 1Mby1M partnership. Okay? Anybody else? All right, folks, we're going to adjourn then. Bye-bye. Happy Diwali to you as well, Sumant. And we'll see you back here next time. Bye-bye.